Good morning, good afternoon, and good evening to everyone, and welcome to another video. So this one's going to be the trade of the week, week 4. But before we get into the charts, I personally would like to say thank you to everyone that has subscribed to the channel. We've just hit 500 subscribers. We're actually sitting at 514 now. So big appreciation to anyone that's liked or subscribed to the channel. You know, the more content that this gets out to, the more that I can help people. So without further ado, let's get onto the charts. So this was a trade that actually hit TP this week, and it's not one that I took this week for transparency reasons. This is one that just hit TP this week. So what I'll do, I'll go over the entry with you. So to start off with, my analysis on this pair here. This is AUDUSD, and in line with the DXY, you know, I was very bullish on the DXY. Okay, now if you have a look here, you can see we're trending upwards. We're following order flow. If you look at individual candles here, you know, we're following order flow, and we're very bullish. Now, to me, that then sends me the idea that we were bearish on the major pairs weighted against the dollars. So with that in mind, we were actually at this position here, right? And what I was looking to do was take down AU, GU, EU, and NU down to lower levels. First of all, what I had to do was look at the higher time frame to see what market structure was doing. Now, if we look at this as a whole, you can see what's happened in the past. We had key high that got swept over here. So if we have a look, we have a key high that got swept. And then if we actually look at this individual candle that swept the liquidity, and we put this line on the open of this candle that swept that liquidity, you can see we had an area where we visited that. Now, ever since that, we have just essentially followed order flow. So what we had here, we had a rounding of price, and it looked like we were off to the downside. Now, that is on the weekly time frame. First target was at this order block, this one here. And the reason being, this is where we had a impulsive leg up and we broke this structure. And as you can see, we had a reaction from that area, but for me, that was only short-lived. Reason being is we actually had a short setup which got respected around this level. Okay, and the reason why there was a short setup was we had this order block here. Now, this was actually we were able to refine this a little bit. And if we have a look on the 5-day time frame, the reason why I use a 5-day is because on Forex, you know, 5 days equals a week instead of the 7 days. So it makes more sense for me to have the 5-day chart as a weekly time frame. Now, what we can actually see is if we have a look at the same sort of principle, we have a look at the first candle that caused an impulsive move to the downside, we can actually see we had some internal liquidity here that got created. We actually wiped that out with this move here, and then we started to reject from there. Now, that was the basis of this move, understanding that we'd already rejected from this point and we'd created, you know, some form of weekly bearish engulfing. I was essentially looking for liquidity targets. Now, the liquidity targets for me, the first target was going to be this old daily low, and then the next one was going to be this old daily low. And essentially, I was looking for a setup in order to take me down to those levels. Now, when I hopped onto the charts, let me go back here. When I hopped onto the charts, there was actually a setup up here that I missed. And I believe I've gone through that in a previous video, so that'll be somewhere. But we were left with a lower time frame setup. We had a 4-hour time frame, and we had a range from up here to down here. So we were dealing within a trading range from here to here, and we had our key break structure at this point here, right? So basically I was looking for some form of entry in this area to take it down to this old daily low and this old daily low as a sort of a swing trade. Now, if I look on the 1-hour time frame, this is where things become a little bit clearer. And this is where you really have to do multiple time frame analysis to see what looks like the best entry. If we look at what's happening over here, we can see we had some retail trend line liquidity. We had one tap two tap. This kind of classed two tap, could be classed as a third tap. And all we did was we pierced this high or these highs with this candle there. So that to me was a sign that we had some institutional money in this setup. Also, if we have a look here, we can see we had our consolidation. So we had our sideways price movement. We then had a significant impulsive push up to take out liquidity here, to take out liquidity here. So that signaled to me that we had some smart money in this move. Now, with smart money in the move there, basically I was looking for two key points of interest. Now I had this hourly order block, and then I also had 30-minute breaker block, which, you could actually say it was a 1 hour order block, but it just looked better on a 30-minute time frame for me. Now, when I've marked out both of these areas, in a sense, all I'm waiting for is some form of confirmation. When price comes into this area, I want either an impulsive break of structure to the downside and then look at gaining entry around this level, or, another sort of setup where we get two highs, a run, and then we sort of move off from there. And that's all going to be on the lower time frame. Now, what we had was around this 30-minute breaker. So let me just show you what happened. And this was on using the 1 minute time frame. It's not always going to happen on the 1 minute time frame. Sometimes it's going to happen on the 5 minute or whatever, the 15-minute time frame. So it's up to you to look and observe what's happening with price and then make a decision from there. So let me just get rid of this stuff so I can play it out in live time. So basically I was waiting for price to come up into this point of interest and then potentially give me a confirmation. So if we just play price forward, you start to see once again another idea of this consolidation, this manipulation upwards, and then we're looking for a distribution to the downside. Another very clear indication that smart money is going to be in that move, or some form of big money in that move, right? So we get an initial tap into our point of interest. There's no real confirmation for me yet. Then what happens is we get a run of this high, right? So we have a clear spike. It spikes up and instantly wicks back down, closes below that high. So that to me is just basically running out stops, getting some liquidity. Now from this point here, we actually had a break of structure to the downside. So a very impulsive break to the downside. We broke structure at this point here. And in a sense, all I was looking for was a entry on a sell limit, right? And what I decided to do, I looked at all the different time frames and I basically went on this up candle that wiped this liquidity. So if we look here, this up candle that wiped liquidity with the stops above the high, you can see, price tapped just into that sort of area. And then what happens from there is price starts to sink from there. Now, this was a lower time frame entry, 1 minute entry, but what I was using was my higher time frame points of interest. So the daily time frame as areas where I wanted to take price down to. So this first area and then this second area. So if we have a look at that all the way down, that then becomes a 1 to 25 trade. You can't really see it there, but if I go on to the 5 minute time frame and make this risk reward thing a little bit bigger, because it is really skinny at the minute. It's actually disappeared. Let me do that again. Right. So it was on a 3 minute candle up. There we are. Make it really wide. Okay, there we are. So, and that's all it was. I was using the higher time frame points of interest, that first area, and then the second area down to there. So it's actually a 1 to 30, 34, 1 to 35, not 1 to 25. The way I actually managed this was as soon as price cleared these lows here, I then moved my stop loss to break even. Reason being is because these lows could have acted as liquidity for price to then actually reverse to the upside. So what I wanted to do was just protect my capital at that point, knowing that we'd had a lower time frame reaction from this point and there was no real reason for price to come back up to there. So that's all I was doing. I was just protecting myself. And yeah, from there, you can actually see, here's an example. So we take out these key lows here and we get a sharp projection to the upside. Now, this is one of the key reasons as to why I actually protected my stop loss there. The good thing is the trade continued to the downside, and this was actually just a re-entry opportunity on the lower time frame. But I only took one entry because it was a 1 minute time frame. I don't want to get stuck onto the lower time frame, and I wanted to just get my entry at my key level. On top of this breaker, the 30-minute breaker, we also had the 0.750 psychological level. So that was another reason, dual confluence for that area. And simply, I just let price play out and do its thing. At this first level, so this was the first daily low, that's when I took my first key partial. And then at the end of the week, the final take profit was hit after the price muddled around a little bit. So that was the trade of the week, and that was overall 1 to 35, but percentage-wise, it came at around 21%, if I believe correctly, after my partials. So yes, it was 1 to 35, but realistically it was around 20%. Now, that was the trade that finished this week, but I didn't actually enter that this week. You can see I entered that on the 22nd of November. So that was a nice swing trade. That was about 160 pips. Not huge, but also not bad for AUDUSD. Now, the trades that I did enter this week, and this is moving on to the next point, the trades that I did enter this week did me over a little bit, and that's okay. You know, that's going to happen. I called this series the trade of the week, not because I'm expecting to get a sick trade every week, but because I actually want to show you what happens every single week. So granted, I had that AUDUSD that played out, but I also managed to get short on Eurodollar, right? So if this time frame is going to be a little bit annoying, but basically, let me get rid of these. It's just daily separators there. Basically, I got short from this area, and it was a similar principle. It was a 30-minute breaker. We had a 30-minute breaker at this point. If you haven't already watched the breaker and examples video, and you don't understand the breaker and the sort of trading pattern, I'd suggest you go and watch that. It's on my channel. It is over here, breaker block and examples. Highly recommend you go watch that, and that will explain this sort of basic setup. So basically, my entry was in here, and I got short. I think it was once again off the 1 minute time frame. Yeah. So this was the entry here, right? We had a tap into this point of interest, and basically I was looking for some key liquidity run, then a breaker or something like that. And basically what we got here was we had a key high that was run above, and then we had a nice impulsive break to the downside. So here was the impulsive break. We had breaker at this level, and we also had an order block as well. So I basically waited for that to happen. I put a limit on there. Had stop over there. It was pretty minuscule. I actually think I had my entry a little bit higher around this order block here. But for the sake of this, I'll just say it was that break block. I can't remember off the top of my head. I've got a picture of it somewhere, actually. I'll find the picture because it's actually important for me to show you that I entered the trade and what actually then happened with the trade. And this is part of transparency for me, because I feel like a lot of people on YouTube, on social media, they can paint a really false picture about what trading is. And for me, this channel is to give you a bit of transparency, give you help, show you what I personally do, but also show you that there is other sides to actually trading the financial markets. So let me just get a screenshot of this. Computer's lagging a little bit. Here we are. Copy it. There we are. So here is the trade that I entered, right? And that was this exact same entry up here. This is obviously like the 5-minute time frame. So I entered that and I had a downside liquidity target, right? And essentially what happened was the trade played out. It was nice. It was well in profit. And I managed to break even the trade. Trade was running well. And then all of a sudden it just turned on an absolute dime and then went and stopped me out. And that's how it happens. Luckily it was at break even, but it was just a moment where I wasn't able to manage the trade. And within the space of 15 minutes, I was out of it at break even when I could have taken around 10%. Now, if you look at the actual screenshot, I think it literally wicked 10R. There you are, wicked 10R and then reversed entirely and it stopped me out. And that's how it happens. You know, you're not going to get every single trade that's going to be a win. You're probably going to have more losses than you are going to win. And this is why it's important for me to personally show you, because, you know, there's a lot of BS in the industry and it's not ideal for people to sort of learn and hold high expectations and basically set trading on a pedestal. You know, it's completely unfair. So this one went to stop me out at break even. I might have had slightly lower entry than that, but it is what it is. That's one trade. Another trade, this one here. So the reason why I was long, it was a daily time frame, and this came down to the 1 hour time frame. This was within a daily point of interest. This was the 1 hour time frame. It went up and did 4%. I was break even. I went on a run. It came out and stopped me at break even, and you know, that's how it is. It went and ran a little bit further towards my take profit, which was around this level. It just fell shy of that, and it went something out break even. So that's around 15% that I've missed out on. And you know, it could have been a much bigger week, but like I said, it's important for me to show you this sort of stuff because there is unrealistic expectations that are put out there, and you're not going to learn. I'd rather be there to tell you that you're probably going to get more losses than you are wins. And there's going to be moments where you think you feel victimized by the market, but that's just the market. It's unpredictable. And the best that you can do is manage your risk and just trade similar patterns and be consistent with it. You know, one of the main things is the mindset and the psychology side of things. And this is why the majority of people really struggle with it, and they will probably end up, you know, failing. And that's just how it is. But if you're one of the people that gets the psychology right and doesn't have unrealistic expectations of the market, then you'll probably go really far. But anyways, that's going to be me wrapping up the trade of the week. So I will catch you in the next one.